breather, maybe 1%, 2%, anywhere between 1 to 3%, right? That's what we want to see before FOMC. That's the idea there. Before FOMC, we want to see this breather, so we want to be clear where, which direction we want to pick during or after FOMC. FOMC says 25 bips, very likely the market will stay up to buoyant. And if FOMC says 25 bips, I don't see another lows on the. I don't think there will be another lows for the market that would that would breach the 2020 lows, 2022 lows. I don't believe that if Fed comes in with 25. Now, couple of things. Wish we had time to get into all of that, but as I pointed out in my note there, that China reopen story is going very well, right? And that bodes very well for everything else. Now, and also at the same time, that bodes well for inflation because people are buying all that stuff and the money is still flowing. So the spending will continue. So that will not bode well for um, uh, Fed. Why is that? The inflation going up, Fed will keep raising rates. It's same thing. So the key is Fed. Key is inflation, and let's say China. So that's the paradox there. Not paradox, but if you have to navigate that thought process there. China reopen. Obviously, commodities are moving higher and whatnot, copper, iron ore, and all that. So that would again fuel into inflation. And if inflation keeps moving higher, Fed will keep raising rates. That's the whole cycle there. So what does that mean? China equities will do good. U.S. equities will not do all that well. That's the idea there, but tradable. And even though if China reopen does continue smooth, then even though Fed will keep raising rates, but still the markets will not move meaningfully lower. Perhaps not make another new low. That's my understanding as of now. Right now, let's get into Apple. Let's check here on the 1 hour. Very likely Apple is going to come back down here. It's going to try to bounce around here. This bounce right now, it is coming from the new hour that just opened, and the conditions are oversold here, so it's trying to bounce. Let Probably it'll come back into 141.20, 141.30 area, and then probably uh, start to move lower. But if that breaches, very likely it's going to come back up to 141.75 area. Then we'll start to take a breather. If it breaches down here at 140.50 area, in very likely scenario, it will come back down into yesterday's lows, 139.80 area. That's what we want to see. And we'll take a call after it breaches 139.80 to further to the downside. If it is meaningful, then we'll stick with the short. If not, we'll look for bounce either here or here. Right? So that's how I'm looking at things. Right, let's get into Microsoft real quick and the DXY, and the markets are down only about, where is that? Yes, it's about 1%. Nothing crazy here. Why? Because you see this thing, this is not reacting, right? So there's always a logical explanation for what is happening. And the 10-year, if the move lower in the market is because of Microsoft, not because of other conditions. So yeah, so keep a watch on that. Let's get into Microsoft. So the idea with Microsoft trade was here, right? So the idea was clearly for Microsoft to go hit this number. Yesterday we talked about this one and take a breather from here. Basically, that's the 8 on the month, and beyond this, if it were good numbers, very likely it would have come back up all the way here. Probably the story for probably next week or something. But 8, we know that anytime it hits a 8 on a major time frame, it'll take a breather. That's just what happened. If it's coming from the upside to the downside, if it hits the 8, it'll bounce. That's just how things work. That's we have traded multiple times on that thesis, and same thing again. It worked out because yesterday I was not able to manage this trade um, uh, actively. I was out, so I just put a stop loss here or profit here, and it hit me. It took my profits out. I was like for a bit I was there. Okay, I should have let it run. Probably it would have gone up all the way here into this. But my idea was that even if it hits there and tomorrow morning it'll come back down, and then I can pick up the same trade again. So that was the idea there. But guided poorly and it came down. Fair enough. And again, the idea remains the same here. Oversold conditions, and if Apple and let's say Tesla and Apple come in better than expected, very likely we'll see probably another 220 or even 216 area push down on Microsoft and probably hold this area here. And by the time that happens, this will keep getting oversold, right? So MACD on the month is still crossed to the downside. So maybe there's some more softness to come from for the tech, but I wouldn't read much into that unless I see what do you call this thing, China. Unless I see China reopen faltering, I don't really see further any meaningful downside. Well, I shouldn't run ahead of myself, but if it does breach this 216, basically the 50 on the month, if it does breach below there, then we'll start to reassess some further weakness in Microsoft, probably all the way into 186. Right? That's still the idea there. But for now, not really plotting anything sub 260 unless Apple says really a horrible quarter and a horrible guide. Basically, then Apple starts to push below that 116 area. Yeah, Apple starts to push below this 120 and start to come back down into 110 area. 50, basically the 50 moving average on the week. Then probably if it does, even here, I'm not really bothered. I'll still be looking for a buying opportunity if it comes down here. But beyond this, this will kind of start to spook me to the upside. Well, if I am a long-term investor in Apple, this will start to spook me, right? But I am a day trader. It doesn't really matter to me which way it goes. I'll just trade what is in front of me. But if Apple breaches below this 50 moving average, this is where the panic will start to set in. As of now, I don't envision Apple breaching below 50 moving average. But if it does, this is where the real panic will start. Why? Just not 50, but also look at this. That's the third standard deviation on the month. That is extreme if it hits that. But let's see how it goes, right? From 140 to 110, that 30-point drop will yeah, wreck. Yeah, will have pretty decent downside impact on SPX, but still, probably the lows will still be about 3,500. Yeah, yeah. So that is still 3,500. The lows on SPX will still be 3,500 unless Apple does breach this number. Then probably SPX will start to make new lows. But as of now, that's not the scenario that I'm planning. Anyways, let's get back to our Microsoft pieces. Microsoft very likely will come back into this number. We'll look for another bounce, 233 area. And if Microsoft starts to keep, Microsoft keeps pushing to the downside, probably one standard deviation is about 229. Nothing out of the ordinary. The expected move is about 5%, I think. It still has about 3.3%. So about logical move about another 2% to the downside. That's fine. If that happens, that's fair enough. We got what we wanted out of Microsoft, and hopefully Microsoft will hold this range, right? Within the third standard deviation on the day, hopefully Microsoft will hold this range. And this is not a story for today. 217 is definitely not a story for today. Maybe if Apple reports bad, or if what do you call this? Fed goes 50 bips for the upcoming FOMC, then probably we are looking at the third standard deviation test for Microsoft. Otherwise, I'm not really looking for that test. Right. And the trade that I'm very interested in this is in this guy. This is still pointing to the upside move. This is the monthly chart. But if you look at this chart, the weekly chart, this is kind of getting, it has been up quite quite a bit. It's been overbought for quite some time. It needs to give up some gains. It came down 5 points from yesterday's highs, and I'm still following that trade. Hopefully, again, I'll try to short it today. uh, Likely scenarios that, in general, the weakness in tech should push Netflix down. I'm expecting it to, even if it doesn't come back into 347. Yesterday, I was still chasing this trade. Didn't work out. Got just 30, 50 points on that, 30, $50 on that trade. But still, I think I'll chase this trade. I think I'll still chase this trade. I'll probably go here, and I'll still chase this trade to the downside. The idea was there for it to come back down, but Microsoft and the markets kept pushing higher. It moved up all the way to 365. Now it's coming down. The idea is still for it to come back down here, breach this 359, and come back down in 357. Probably test this number about 356. It has to take, it has to come back down. Right now, it's below the mean, and this idea is still valid that it needs to come back down here into 356, probably the second standard deviation of 354. That's my understanding as of now. And likely, I will not be putting on any big trades today. Even if I put on any big trades, I'll be exiting those trades before 11, and probably I'll be signing off by 11 or 11:30. So yeah, bear that in mind. Let's get with the DXY. No, not DXY. Right. So that's another trade idea, and let's get into Tesla. Tesla is, if Tesla numbers come in good, I'm expecting Tesla to push probably all the way up into 167, or at least first Tesla needs to go here, hit this number 159 area, right? So this is the expectation from Tesla. 159 area is the expectation from Tesla. If the numbers come in better than expected, yesterday I think they announced a new factory, gigafactory in Nevada. Yeah, so they are trying to grow their footprint and and all that. So the game is upside probably 159, downside is still 88. This is not the story for earnings. 88 might accelerate that push to the downside into 88, 89, wherever this 200 moving, 100 moving average on the month is. Probably that's going to happen next week or later after FOMC. If FOMC says 50 bips, then probably it's going to come back down here. And if the numbers are bad, if the numbers are better, I'm expecting it to go hit this number pretty easily, 159 area, and short covering will come into picture. And if that clears, very likely it's going to push all the way. It's detached from its 5 on the month, so very likely bright chances it will keep pushing higher and test this 181 area, 180, 181 area. And let's go here on the week. This right here, the 50 moving average, 159, 156, I think between 156 to 159, that should act as pretty decent resistance. But if that clears that resistance, next is 167. This is an easy trade. If it clears the 50 moving average on the month, then 100, then 200 moving average on the week is a very easy trade, straightforward, clean shot. Right, let's go here for Tesla. Again, this is the number. This number is minimum. Very likely, the 50 moving average on the daily is minimum if Tesla delivers good numbers. I'm expecting Tesla to deliver good numbers, but if it doesn't, then very likely it start to the drill. Come back into 5, come back into 8, then very likely it'll retrace back to the mean. As of now, the plan is not to breach the mean, but if it does breach the mean, we're still looking forward for a push down all the way into second standard deviation. Second standard deviation to second standard deviation, right? And if FOMC comes in with 50 bips, then break the second standard deviation, come back into third standard deviation. By the time if it starts to breach the second standard deviation, the third standard deviation will be further extended, probably into 80s, right about here, right? Close to 88, 89, something like that. So that would make it a test of third standard deviation and a bounce again. So that's how the game is right now. And if you are if you don't want to be stuck with that exact timing and all that, probably try 2 weeks out calls, 2 weeks out puts. Yeah, and if you want to hedge that trade, probably sell something up here. Cool thing. Anything else? Anything else we're watching? Let's look at VIX. So now, with ES, or with the markets better than 1% down, VIX is not really terribly enthusiastic about that. It's just kind of 5%. But let's still look at VIX. VIX, if it clears here, very likely it's going to push all the way up here into 2059. Still nothing terrible. VIX mean reversion would be completed about 2080, 2081. So yeah, mean reversion makes sense for VIX to actually happen. It's been a long while that VIX has tested that. So let it come back up, and probably if VIX closes above its mean, and I'm expecting it to hit this number 2152. Still nothing terrible. It is, as long as VIX is still. I think the 21s to 25s, rather the 20s, the mid 20s, the lower 20s are still the 18s and the 19s or the higher teens for with regard to VIX, given the environment. It's pretty low given what is happening around. It's very low. Probably it's counting on China reopen to go smooth. I think that's what is happening with VIX. But VIX to the upside, if it has 2050, 2060, then very likely it's going to go hit this 2080. And if it closes above 2080, or if it crosses this 2080 area, then we'll further start to look for VIX to the upside, probably into 2160 area. And if VIX does this, then very likely we'll see another 0.5% to another 0.75% lower on ES. Cool thing. Amazon. Amazon is another one I want to be watching. 3%. It was up 3%, three and three something, and it's now down three something. Not too terrible, and very likely if it starts to breach down, then let's see where it is headed. Uh, if it doesn't bounce here 92.40, then very likely it's going to come back down here into 91.13, and very likely it's going to push down here into 90. Right, the mean reversion will complete at 90, and very likely if I'm short, I'll be looking to exit my first position here 92.40. If it breaches, then I'll put on my second position all the way down here till the 50 moving average on the daily. If that breaches, and exit my short position again here, and if that breaches, then again I'll take another short position down here into this number, because the potential for bounces are better than the potential for at this point, at these spots, the potential for bounces are better. So that's the reason I'll be looking for an exit and then re-entries. Right. Anybody looking for anything in particular? No. Okay. Let's move into live trading.